welcome. Roll up, ladies and gents. Let's get this show on the road. I'll let everyone cruise into the room and we'll get started. And as I always like to do, well, not always, but I'm kind of doing a little bit more of a little extract from a book for you. But let's let everyone kind of jump in here. Good to see you. Oh, I can see the participants. Some familiar faces, of course. I see you. And probably some new faces as well. So, all right, we'll get started. Let's go. We are 1 minute past 6, so let's roll. Okay, here we go. This is I think it's one of the first trading books I ever bought. Come into my trading room, Dr. Alexander Elder, and it's all right. It's when you're new, you're like, oh, MACD and this and that, the other. Anyway, there's a few interesting extracts from it. I want to share one with you now. Okay, so here it is. And I'm going to paraphrase it a little bit because it's quite long. I don't want to sit here and read the whole thing out to you. Right. Training for battle. How much training you need depends on the job you want. If you want to become a janitor, an hour of training might do. Just learn to attach a mop to the right end of the broomstick, find a bucket without any holes. If, on the other hand, you want to fly an airplane or do surgery, you'll have to learn a great deal more. Trading is closer to flying a plane than to mopping a floor, meaning you'll need to invest a lot of time and energy in mastering this craft. And it goes on to say, society mandates extensive training for pilots because their errors are so deadly. As a trader, you are free to be financially deadly to yourself. Society does not care because your loss is someone else's gain. Flying and medicine have yardsticks and standards as well as professional bodies to enforce them. In trading, you have to set up your own rules and be your own enforcer. Pilots and doctors learn from instructors who impose discipline on them through tests and evaluations. Private traders have no external system for learning, testing, or discipline. Our job is hard because we must learn on our own, develop discipline, and test ourselves again and again in the markets. And it goes on that paragraph, and that chapter is actually quite interesting. So it's true, right? As traders, we can start the ball rolling, set up an account, off we go. We're not really we're not held accountable. We're there. We've got our own money. We put it in, and we kind of try to do the best we can. And which is why it's such a challenging endeavor, because you have to develop that self-discipline. You have to develop the muscle that enables you to hold things back, not overtrade, especially if you're kind of trying to do it on your own. Hopefully, when you're here on webinars like this and maybe you join communities or whatever it might be, and you're with others, you get a little bit of guidance and you say, hey, whoa, put the brakes on a little bit, step back, review, assess. But if you're not doing that, it's very difficult. So just be aware, it's challenging, as if you didn't already know already. Difficult game, this, guys. Okay, so today we're going to talk about reflecting, refining, reigniting. The 3 R's, if you like, if you want to be all fancy here. We're going to get a head start in the new year. Where are we now? We are 3rd of December. Well, 3rd of December, who's got the Christmas tree up yet? I'm sure a portion of you have. Good quote here from Paul Tudor Jones. Preparation is key to success in trading. The more you prepare, the less you need to predict. And so what I'm going to attempt to do today, which, by the way, last webinar of the year, boo, everyone's crying in the back. Don't worry. Hopefully we'll be back. But last webinar of the year. And I thought this is a great way to share with you the way that I kind of review and audit what happened in 2024 for me, and also look at what I want to do in the new year. Now, I don't pretend to be an expert on any of this type of stuff, but hopefully I give you some ideas that you can maybe go away and find goal-setting experts out there, and or maybe you go, you know what, that's enough. That's enough. Mark's given enough information to kind of take the best from the previous year and set some good goals for 2025. And I don't know about you, but I don't want to be on the back foot for 2025. I like to have momentum. Whether that is just momentum is in my work ethic, in my preparation. I just want to be going into January on the front foot. And I know we're still quite away yet, and people are still trading the new year, December. I know I am still, of course. There's opportunities. I still think there's trades out there. If they set up there, I'm not going to go searching for something, but it sets up fine. But I also want to be ready so that 2025 comes, I'm not like, oh, what should I do? What should I do? Market's moving. I'm not ready, not prepared. I don't know what I'm doing. I don't want to do that. So we're going to share some stuff about today. Anyway, I've got to remind you guys, of course, the risk of trading spread bets or CFDs, trading leverage, trading on margin, double-edged sword goes very, very well, as we know, when it's going in your favor and you are using your leverage to your advantage, you are long, and the market's going up, then everything is great. But of course, it can work the other way as well, and losses can happen very, very fast. Risk happens fast, as they say. So just be fully aware of what you're doing, understand the nature of the instrument you're trading, spread bet, CFD, whatever it is. Only risk money that you can afford to lose, and understand the kind of odds are not on your side. So just respect that. Now, we're obviously trying to be on the right side of things. We're trying to minimize our losers, maximize our winners. That's the nature of the beast. But depending on where you are in your trading journey, you've got a higher probability of loss than others. So just be aware of that. I think everyone knows this by now, but it's important that I share that, not only for newer traders coming in, but also as a reminder. If you've been trading for a while, you're like, hey, I'm trading a deadly game here. I've got a deadly weapon in front of me. And it doesn't tend to be the market that offers the risk. It's us. It's us doing something silly, us going on tilt, us over leveraging into a position. And that's why leverage is so useful, but it doesn't say, oh, excuse me, sir, are you sure you want to do this? It's your own risk. So just be aware of that. Okay, let's get straight into it, ladies and gents. I think Christmas and New Year's are great for goal setting, right? It's a good natural pause. Markets tend to slow down. I say that, but then last year we had that bid that pushed right up into almost the new year. Do we have the Santa rally? Different topic. Anyway, generally slow down in markets today. They're a little bit quiet, right? Use time to reflect. There's a few days the markets are closed. We've got these pauses in the market, half days here and there, even though in one way, I always think it's weird for us to make so much of a big deal of the end of the year. It's just literally a timestamp on your equity curve, right? I always think that as well for days and weeks and months. You're in a position and it's working your favor and it pulls back the day before the end of the month. That's going to negatively impact the P&L on the month, and then it boosts back up the next day. So it's a bit odd. Sometimes I think it's a bit strange. But anyway, we are what we are. And it's nice as well, I think, to even if you haven't performed as you'd like in 2024, it's nice to get some momentum with things you can control. So even if you haven't had the performance you wanted, even if your equity curve isn't quite what you'd like, you can still grab some wins at the end of the year, not in terms of P&L, but in terms of productivity, in terms of motivation, in terms of work ethic. Now, it's a perfect scenario. If you've got both, great, you're up on the year, you feel good about that, and you can get momentum. It's a little bit easier, I have to say, when you're looking back on your equity curve of 24 and you're like, yeah, you know what, I did okay then. It's easy to get momentum, but it's still strong if you can push for 2025. Okay, so we're going to, we want to use it's a fresh start. You can wipe the slate clean. You tend to have some new fresh goals. It's good to also integrate your trading goals with some of your broader aspirations, right? So, what are you doing in life? Where are you? Is health's important to you? That's got to come first. Your family's got to come first. Maybe you've got work commitments, they've got to come first. So sometimes you're trying to fold your trading into that. We'll talk about more on that in a moment. And I think it's very, very important because a lot of traders have great potential. I see a lot of traders with great potential, but struggle because they're trying to do too much. They're trying to juggle so much. They're trying to day trade this. They're trying to scan this. And the work just never gets done. And maybe you feel like that sometimes as well. And you have to kind of take a step back and say, well, these are the resources I've got. I think I did a webinar on this a couple of weeks ago. This is where I am. I need to solve 4x. So just something to consider. We'll talk about more of that in a moment. And we just want to build that momentum going into the new year. Just a reminder, ladies and gents, I would just say to you this, that I'm just moving some stuff around up here. Listen, I don't pretend to have all the answers. I never stand up here and go, "Look, listen, I know everything." And honestly, I don't. I've got a lot of experience in the markets. Those of you who know me know I say this very, very often. I kind of say I'll share with you what I think is valuable, and I'll share with you some of the things that I see from others that I think are helpful. But I absolutely don't know everything, and I think the market yeah, after a couple of decades, you got to be careful with your ego because the market goes, hang on a second, does that trader think he knows everything? Well, I've got a certain room for this gentleman. Step this way, sir. This is the trader who knows everything room. Bring all your margin. You're very welcome. And you tend to get slapped. So I will share stuff with you that I think is valuable, but I don't know everything. I'm not here to say that I do. So I'll share with you ideas and thoughts I think are useful, observations from others. You must do your own research on anything that I say or anyone says, to be honest with you, no matter how much authority. Some people aren't quite as, they think they know everything and they will tell you with authority that that's the way to do it. Just take everything with a pinch of salt and do your own research. Not say it's wrong or it's right, but you go, I like that idea. I'm going to take it, run with it, do my own digging, and see, if something we can work with. Things take time. Implement a change, stick to it, observe, make course corrections. If you're here before, you will have seen me say that regularly, and I think it's so important. If you're new here, by the way, I suppose I should introduce myself. My name is Mark Holstead. There you go. Let's get on with the job. Right. Our plan today. Number one is reflection. So we're going to reflect on 2024, wins and losses, consistency versus performance, metrics that matter. The second thing we're going to do is look at goals. So solid goal setting for 2025. So setting smart goals. It's a little bit corporate, I know, but it works. So we'll suck it up. Short-term versus long-term goals, process goals, beginner, intermediate, and advanced goals. So depending on where you are in your trading journey, hopefully there'll be something for you there. I think it's important because I think I mentioned this last webinar that very often we can have unrealistic expectations with where we are in trading and where we should be. And I reiterate this, it's important to have ambitious stretch goals, big goals, ambitious goals. Absolutely, man. That's how big things happen, right? But it's also important to be realistic about where you are. So whether you are beginner, intermediate, advanced, going to depend on what goal you're going to put for yourself. And tools and tactics to make 2025 your best yet. Okay, so reflecting on 2024, let's look at this. This is interesting. Now, I don't want to make this a burden for you. I don't want you to say, Mark, this is way too much effort. I haven't got time to do this. I am sipping eggnog, eating turkey, devouring the fifth box of celebrations. I hope you're not doing that, but you get the point. I don't want it to make it a burden for you because no one will do it, right? And hopefully you build momentum. You do the job with trading here. It's like everything, right? Is to do as much work as you need to get the results you want, and you kind of get diminishing returns. So if you're constantly analyzing and over analyzing stuff, you kind of, it almost becomes a negative impact, right? It's the same with reviewing and reflecting. You can sit there for hours devouring charts, devouring this, devouring that. That's probably not going to serve you. You don't need to be there for ages. So I'm going to try and give you that kind of efficient way of getting the best from it. Now, if you want to do more and you feel like you get value from doing more, and more than likely you find little avenues to dig down to extract some value from, that's normally how it works. When I'm reviewing and reflecting, I'm start off with this kind of idea, which I'll share with you in a moment, and I go, that's interesting. I didn't know that. And I'll jot it down and I kind of build a plan from that. So what we're going to do is reflect on 2024, a strategy for doing that. And this may be difficult for you when we say look at your best trading performance because you didn't have the year you wanted. And I understand there's people here from all everywhere, from all approaches from all angles, should I say. You didn't make it. You had a losing year. You had a first green year, multiple green years. You had a devastating year. I understand that, and I get it. And it depends on your journey and all sorts of different stuff. So, you might think, "Oh, my best trading performance was a bloody awful year." Fine, but there will be an aspect of trading that was good. And if you had a year that was okay, there's always going to be something good to take from it. And that's what I want you to do, regardless of whether you're up a massive amount or whether you struggled this year. It doesn't matter with the review process and reflect process. So we want to look at your best trading performance. And I'll show you a visual example of this in a moment. But we kind of want to look at the first things are, does the best trading performance, so if you're looking at a couple of months performance, a couple of weeks, whatever it might be, does it align with market conditions? And what we're trying to decipher here is a lot of traders don't realize this. Is that a fair thing to say? Yes, it's a fair thing to say. A lot of traders don't realize that the conditions play such a key role in performance. And sometimes you don't articulate the type of trader you are. If you're very, very good at trading momentum, you're very, very good at kind of spotting that volatility. When the volatility gets crushed, and you try and trade the same thing, it takes you a while to recalibrate and go, it's not really my thing. So we can look at market conditions, style of trade, time and effort allocation, and other. And what I mean by style of trade is, are you mean reverting? Are you trading with a trend? Are you scalping? Are you looking to run trades? All this type of stuff that you might have explored last year, you want to correlate it with your equity curve, which we'll show you an example in a second. And time and effort allocation, you might look back and say, you know what, I put 30 days of total focus and absolute effort into my trading, and it showed. My equity curve was good then. As soon as I was off the boil, as soon as I was swinging in trying to find a trade, wasn't quite as good with my journaling, wasn't quite as on point with this, it shows. And that might be something you take through to 2025 and say, can I sustain that level of effort? Maybe I can't, but maybe I shouldn't be trading unless I can sustain that level of effort. So it's all about, calibrating, understanding, and being reflective, taking the 36,000-foot view and reviewing your trading. Anything else, like something happened to you last year, positive, negative. Did you have a good trade idea? There's just always something that maybe aligns with your best trading performance. And we want to do that with spells of poor performance as well. So the poor performance in your equity curve, the good performance in your equity curve, so we can build a plan for 2025 based on data. So these are trades you've done. This is it. This is not guesswork and saying, well, if I took this and did that, you actually took these trades. That's why it's so valuable. And if you haven't got a journal, that's fine. You can go and download your blotter from the broker, Pepperstone, download it, fine. You can upload it into Excel, or you can upload it onto Google Sheets and create your own equity curve, but get your equity curve up. If you're in a journal, that's great. It's probably already there, but just get your equity curve up because this will help you loads, because you can visually see where the performance was stagnating, where you had the jumps in performance, where you had the bad losses, all that type of stuff. It's so revealing. Easy enough to do. Like I say, download your blotter, stick it into Excel, or even download your blotter, stick into ChatGPT. ChatGPT will do that for you as well. So get your equity curve sorted out. Okay. Now we want to analyze and assess. And this is kind of when we're going to say, right, what was happening at the time? So when I'm looking, if we take a look at the good performance, right? You had some good performance. We want to look at what's happening at the time with the markets. So were they in a volatility expansion phase? Were they in a volatility contraction phase? Were they trending? Were they rotational? Were they driven by news? What was happening in the good times and the bad, with both you and the market? So, you think about your personal journey was at a time when you had lots of things going on. Maybe you had things with work and they were as bothering you. Maybe you had something with family. Maybe you felt great about stuff. You just come back off holiday. What was it that was giving you the positive or negative performance in your equity curve? And what was your style of trading at the time? We've already said about trending or rotational. Okay, so for example, this is kind of an interesting example, I think. So it's an equity curve from a trader, done okay. They're up about 35% or so so far. And you can see we kind of had a little bit of a dip here, push back up to highs. This was their worst performing moment here, right? And you could argue that was their best performing there. Okay, so they had a good kind of run early January. That was their worst performing period there. It's about half a month, bit of stagnation here, and they're really accelerated here. So sort of 1st of August up the way through to sort of mid-October, that was their real kind of boost time. So how can we use that information? I'm just checking that I've not missed any. Oh yeah, by the way, guys, just said, yeah, stick your questions in. I'm not actively looking. I can see them firing up, but if you want to put your questions in, then feel free. Okay, so what happens now? We now know, well, let me tell you, I know that this trader, he likes to trade GBP, JPY, GJ. He is, this is the majority of his trades. Some of the euro, but this is the majority of his trades. I appreciate if you're trading multiple instruments, it's maybe not as easy to do this, but kind of the markets generally you favor. Most people favor a handful of markets. So GJ is this guy's instrument of choice. And there's our daily chart for pound yen over the year. If you're trading Forex, you know exactly what's been going on with this. Up to the highs, capitulated down, had that August kind of flush when it was all about the liquidity and the carry trade, and we kind of had a little bit of bid back, and we're rolling around. Anyway, so what I've done here is I've overlaid the equity curve on the pound yen daily chart, and it's close enough, right? We're end of July here, start of September here, October here, so it's about right. It's pretty close. Now, if you're doing this, you might be a bit more accurate with it. Maybe you can kind of download some of the closing prices to Excel and form it so it's really, really perfect. But this is pretty damn good. You can see that the really good performance started about here. And that was in line with this capitulation phase here. I mean, didn't know it was capitulation at the time, right? But we had this kind of exhaustion move and rally back up. And that was the start of this trader's decent equity curve, decent runs. They went from here to here. And it was this volatility pickup. When we started to see the ADR picking up, we started to see the volume picking up. It died off a little bit here, fine. And it kind of stagnated. Then when it picked up again, sort of little bit of a pickup in volume, little bit of pickup in volatility, they kind of rally back up. And so their equity curve shows generally, because we're kind of just really just touching the surface with this, but it really is like, hey, this trader does well in high volatility environments. Let's just double check this. When was the period of stagnation, or sorry, the period of drawdown? So 18th of Jan to the 9th of Feb. Those are the dates when I kind of dug in a little bit deeper on this. What happened with the market? So 18th of Jan, 9th of Feb, total stagnation, declining volatility, ADR declining, volume. Yeah, I know it's a bit loose, the volume and stuff on your on the forex chart, but you see what's happened. Nothing going on, and that was his poorest performance there. So very roughly, we've taken whatever we've taken 3 minutes to do this. This trader thrives in higher volatility environments. So this trader already he may not know this. This is the thing, and there's more details you can go and dig, of course. But on a surface here, we know this trader thrives in high volatility environments, and he sucks when stuff's not happening. So he's probably trading those breakouts, those momentum moves, the trend type moves, the breakouts, pullback breakout type trades, momentum ignition, volatility expansion, all that type of stuff. You would guess. Or he's trading mean reversion, but he's being very smart with it. I doubt it when you look at this move here and you look at the P&L overlaid with that, because that was really a spike. If he was trading mean reversion there, he would have had his face ripped clean off. So you get the idea. So now you can use that as a North Star. If this was you, and say, hey, you know what? I am pretty good at trading, high volatility environments, and I'm not very good when things are getting crushed. So what should I do? Do I need to have some sort of filter going into 2025 that says, hey, if the market's flatlining, if the market's oscillating around a moving average, if the Bollinger Bands are contracted, whatever you want to use, an ADX for whatever, I don't particularly like ADX, but you get the idea. If you want to use an indicator that says, hey, unless this indicator's doing that, I don't trade it. The RSI has to be overbought or oversold, or we have to have continuation, persistency of trend, or I have to just eyeball it and go, something interesting is happening. Then maybe you say, right, well, actually now going through to 2025, based on the trades I took and the equity curve that I had, my performance was better during the higher volatility environments. So I now need to make sure that I'm focused on those, because trading isn't about doing everything well. It's about doing one thing exceptionally well and trying not to screw up at the other times. And this guy did an okay job of it, right? He stagnated for a reasonable period of time, but that didn't matter. He's still ending the year up 35, 40%, or somewhere between 30 and 40%, depending on how he ends the year. But he put his throttle down and he did the job he needed to do. And it was kind of that law that often happens in trading. A few months made his year, but he didn't screw up too much. Perhaps you could say he maybe shouldn't have got involved in that, but often you don't know. But he didn't get too much damage. I keep flicking the slide. Apologies. So that's something to consider. So once you've done that, and again, I really just touched the surface on this. You can go as deep as you like with this. And the idea being your North Star is, how can I do more of what's serving me and less of what's not? And we asked that question very often. We asked that question a few times last year to ourselves, but now we have data. Now we're going a little bit deeper. We're looking at the equity curve and we're saying, the proof is here. I can see that my, boost in equity curve aligned with this. I need to do more of this. I need to double down on what's working. And where am I getting nailed? I'm getting nailed here. Is that because of this market environment, or is that because of something I've been doing or feeling? So just be aware of that, because that's so powerful. It's really insight into the type of trader you are. And very often we don't really know. Now, if you've been trading for a long period of time, you kind of know. You kind of know, even if you haven't done the digging, you instinctively know that stuff doesn't serve you. You don't do very well in that kind of environment. So, but if you're kind of developing and you're kind of finding your feet, this is a really fast track way of knowing what you're better at and what you're not so good at. So also evaluate how you handled the stress, greed, fear, frustration, equity curve frustration. I've just uploaded a podcast talking about this because I read something a while ago and it's just so perfect about getting frustrated with stagnation. If you go back to this trader's, I'm going the wrong way. If you go back to this trader's equity curve, that was a pretty unpleasant stagnation, right? No one would argue that up 35, depending on obviously what size account you've got, but 35% is pretty good. It's a pretty good year, right? It's nice. He hadn't had massive drawdowns, but he's had this stagnation for months and months and months and months. And now many traders get frustrated. They start swinging the bat. They start trading more size. They start trading different instruments. We've all been there at some point in our careers. I remember in my early years, 2003 or whatever it might, 2003, 4, those early years of just doing exactly this, being frustrated that the equity curve's not moving, and then trading more size, thinking, well, I'll push it. And of course, inevitably that does the damage because the environment's not right. You're trading frustrated, and it's the worst place to be because then when the environment is right and you are aligned, you've got to come back, claw all that negative damage that you've done to your account. So just be aware, be careful you don't get caught in that trap of equity curve frustration. And I say for many traders, as I've mentioned here, it's a common thing. So just spend some time working on it mentally. Okay, so what have we got next? Metrics that matter. So I mentioned at the beginning, I think it's important to know what you're trying to achieve from your review and your audit of 2024. And as I also said, we don't have to go crazy. But some of the metrics I think are valuable because they are something you can focus on. In a moment, we'll talk about goals, and I'll give you kind of 3 example goals that you can kind of use for yourself and adjust for your own trading. But there's some things that really move the needle and you can work on them. So win rate is important. It's important in a certain aspect in that now, obviously, the bottom line is crucial. But if you're developing trade at the equity curve, you're kind of looking at that going, well, that's not really where I want it to be anyway. Okay, I've got the oscillations and I'm kind of mapping them on the chart, fine. I'm mapping them with what I was doing in my life and the time and the months and et cetera, et cetera. But ultimately, win rate, then you say to yourself, hey, if my win rate is quite low, but my R multiple, as in my risk reward ratio on the trade, as in how much I'm making when I'm right versus how much I'm losing when I'm wrong, is low as well, then statistically that's never going to work. We know this, but example might be if you've got a 30% win rate and you've got an RVR of 1-to-1, i.e., you risk $100 to make $100, you're going to lose money. If it's a 40% win rate and you've got a 1-to-1, you're going to lose money. Now, if you've got a 40% win rate and you've got a 2-to-1, i.e., you make $200 for every $100 you risk, then that's much better. It's going to work out in your favor. So, you understand that this is, and what you need as a trader, your job is, okay, I need to push my R multiple up. And that might be, well, I need to stretch for bigger targets. I need to be smarter about my positioning. There's various things we can do that. And we kind of won't dig into it now, but there are various different ways that you can adjust your R multiple, but you can't do that. And you don't know where to focus it unless you have the number. And same with the win rate. You might say, yeah, my win rate's a bit low. I need that a little bit higher. It might still work, but you might be like, that's where to put the effort, because if I can just reduce that or increase that a little bit and keep my R multiple the same, that's going to have a decent impact. And what you can also do is back test stuff very, very easily. You don't have to go crazy here and say, well, if I, reduce my losers, if I just capped off those worst losers, every worst loser in the month, for example, how would that affect my R multiple and my win rate and equity curve? And very often you're pleasantly surprised. As a developing trader, it's often a couple of bad months or a couple of, bad trades sometimes that do all the damage. How long it took you to recover from drawdown? Again, if your equity curve is the wrong way for you, that's still, how long it took you to kind of boost back up. Just looking at some of those different metrics of how long, what are the cycles of your trading consistency? Do you have spells of good trading and spells of bad? How long do they last? Because often, again, if you extrapolate that out into the market, it's often aligned with market conditions or something that's going on in your life. Or if you're very, very early in your trading career, you're developing, you shouldn't even be looking at your equity curve anyway, because you're just learning and putting the screen time. But that's by the by. MAE, MFE, maximum favorable excursion, maximum adverse excursion, and very, very quickly how far the trade's going in your favor before you come out. So let's say you buy at 50, it goes to 100, comes back, you close at 75. Trying to think of what my example I'm using there. Your maximum favorable excursion there was to go 50 to 100. We did $50, even though you closed it at plus $25. And if you find yourself doing that consistently, your MFE is high relative to your P&L you're taking. You could do this in pips, points, percentages, whatever you want. You might be holding trades a little bit too long. If you find this kind of theme that you're holding trades too long because the MFE is relatively high, and you're taking out, you're like, oh, I'm holding too long. It's probably the other way around. Your MFE is probably $50 and you're closing at $50. And that's because you're not holding trades long enough. You need somewhere in the middle. You need MFE to be, above, quite a bit above where you're exiting, because you want to kind of come out of trade, depending on the style you're trading, of course. But it's a good metric. We're not going down a rabbit hole here today discussing that in too much detail. We have done before, and I'm happy to do it again at some point. MAE, maximum adverse excursion, very good for adjusting your stops. So if you have, let's use that example again, buying at $50. Let's say you've got to stop at $20. Okay, you wouldn't, but you get the point. $50, $20. If your maximum adverse excursion is only $10, you probably are risking your stop's too wide. You can probably tighten things up and get more bang for your buck, and that would affect the R multiple. So these are slightly granular second tier data points that you can use to decide where you're going to apply pressure in the new year. Okay, my MA is, it's more than it needs to be. I can probably tweak my stop. If I did this, how would it affect my win rate? Okay, it would change it a little bit. My R multiple would go up significantly. The bottom line would change massively. Okay, there's where I need to apply the pressure. Your expectancy and some other risk management stats as well that you can kind of dig into that are important to you. All right, so let's move on to goal setting. Okay, so solid goal setting by the way, any questions you can chuck them in. I'm happy to answer. There's a few in there. We'll get to those at the end, but feel free to fire away, guys. If I can help you, I definitely will. Okay, so let's move on to goal setting. Hopefully that all makes sense. So goal setting for 2025. So what we've done, let's review. We've kind of audited the performance for 2024, regardless of what your equity curve looks like. Forget that. And there's many traders watching this going, my equity curve looks awful. That's fine. You still do the same thing, because what we're doing here is twofold. Let's go upstream a bit. Twofold here is, one is actually trying to create a new strategy, a new approach, an adjustment, a course correction for the new year to become a better trader. And you can see how that would work just by the raw data. We're looking at data in front of us. And if you were, let's say you were hired as a consultant to come in and audit a trader's performance, this is what you do. But we're also doing it to create momentum for 2025. And if you're listening to this as a recording, whatever year it may be, you're saying, hey, I'm doing something proactive for my trading. I'm moving forward in my trading in something I can control. Yes, my equity curve might not be where I want it to be, but I'm doing what I know I'm going to be doing when my equity curve is where I want it to be, if that makes sense. It's a mouthful, but hopefully you understand what I mean. And that process helps you go into 2025, January, on the front foot, saying, I've audited my performance. I've checked this. I've done this. I'm ready. I'm dialed in. I know what I did wrong. I know where I'm going to go. And we'll talk about goal setting now. I know the course correction I'm going to make, rather than what most traders will do, who are developing. Now, obviously, if you're more experienced, you do this because you know the value you get. You look at the previous year and you go, I need to do more of that, less of that. And you kind of move it forward. And that's how you kind of get the exponential improvement in your trading. But if you're, most traders who are struggling, who have not got the performance and results they wanted in 2024, just go, whatever. And they just go into 2025 without any real thought of it, but maybe a pondering when the chimes are going at midnight on 2024. You know what? My trading is not where I want it to be. And it's gone. But it can be if you kind of do the adjustments and look at the data and use the end of the year as a kind of way to wipe the slate clean. Okay, so let's look at goal setting for 2025. I don't claim to be an expert on this, but I'll share with you what works, or I feel works for me. And you can kind of go away and maybe do some digging yourself and find out other ways of doing it. There are probably better goal setting experts. Can you be a goal setting expert? What a funny thing to be an expert in. You'd have to have some results for that, wouldn't you? Be like, yeah, you got your private jet, pal. Yeah, all right. You're a goal setting expert. That would be a goal setting expert. Okay, so solid goal setting for 2025. Before we get started, decide on your deeper motivations for trading. Don't want to get all spiritual on you, but it matters, right? If you're there to try to make a little bit more on an account you've got, then that's your motivation. You're like, hey, I want to take a couple of trades a month. I quite enjoy it, but I kind of want to make more than I would if I had my money in the bank, for example. Or maybe you're like, I've got a small account. I want to try and make as much as I can, and I'm prepared to lose it all. Or whatever it might be, right? We'd have to go into the different minutiae here. Then ensure your goals are aligned with your why for clarity and focus. And why I say that and why I've kind of put this slide up is it is important because if you create some friction in your mind, or subconscious creates friction, and if you're trying to swing the bat for every trade, and your subconscious is like, hey, my job is not to go crazy here. My job is just to, put a year, especially if you're looking at your trading career, you're like, my job this year is to be small green. Let's say you've been red for the past few years. Like, I'm not trying to knock it out of the park this year. I've got a realistic goal of just steadying the ship, calming things down, putting in a small green year so I can build on that for the next year and maybe swing for the fences then. So it's all about understanding what you're actually trying to do next year. Okay, so as I mentioned, smarter goals framework. Yes, this is a bit corporate. And I think as traders, we kind of repel the corporate stuff a little bit, but it makes sense, right? Specific, measurable, achievable, relevant, time bound, evaluated, readjusted. Let me show you an example rather than going through each of these. But the idea is that you're not just setting goals that you can't measure. You're not setting goals that haven't got any specificity to them. There's no time constraints to them. They're not realistic. They're not relevant to what you're trying to achieve. So let's look at an example. So example might be improving your risk management, right? So your goal is to consistently risk no more than 1% of my account per trade by March the 31st, 2025. You're specific with it. You're saying, I'm not going to risk more than 1% per trade. Very easy. There's some specificity to it. It's measurable because you can then just look and see, well, how many times did I risk less than 1% per trade? Easily measurable. You can achieve it because it's something that's in your control, right? No matter what happens to the outcome, you control the risk. That's something we do control as traders. You control the risk. Don't be under any illusion. Okay, now and then you get these outlier events, market gaps, headline risk, etc., etc. That happens in your favor and against your favor. But generally speaking, you can control the risk. Okay, achievable. You can adjust your trade size and stop loss to suit it. We all know this is trading 101, right? I want my stop loss to be here. This is my entry. I adjust my position size to suit. I don't decide how much I'm going to risk and adjust my stop to suit. I do the stop, the entry, and adjust the position size to get that 1% risk. It's relevant because you know that proper risk management is essential to becoming the trader you want to be. There's a time constraint on it. You're achieving this by the 31st of March, 2025. You can evaluate this because you've got to look every week and say, hey, does my journal say that I'm sticking to it? Does my journal say I'm doing 1%? Yes, yes, yes. And you can adjust and modify and make some course corrections if you're not sticking to it. Let's say it's below 90% by February, for example. And this is an example, right? But you get the point. And now, because the beautiful thing of this is you can say to yourself, okay, I have a problem with risk management. Let's say you have a problem with risk management. Let's say you go and tilt from time to time. You can say to yourself, I can control all these things. I can measure it. I can adjust it. I can evaluate it. I got a real easy way of doing this. All I've got to do is this. And then that becomes your main focus every week. That becomes your main focus every week. And then you say, you know what? This week I slipped up. Okay. Well, I need to adjust my approach. And this is how you dial in different things. And you say, do I need to use a timer? Do I need to journal my trades? Do I need to make sure that I'm not trading this instrument? Whatever it is, those are the operational considerations to get to the goal you want, because you might review and say, I'm lower than I wanted. I need to be 100%. I said I would be. And so you make those adjustments to get you to that goal. And the beautiful thing about having a time limit on it is that you create some urgency, because for many traders, there's no sense of urgency. They're like, I quite like it, but you know what? Let's see what happens. I'm going to try to do this. Yeah, but what are you going to try and do? Well, I'm going to try and I'm going to try and not go on tilt. Well, how? How are you going to measure it? Is it achievable? Is it relevant? You understand this is it's a specificity that makes it so important. So another example, number two. Let's say you want to improve your discipline. Goal to complete I know this is a bit text heavy. I apologize, but I think it's important to complete a trade review to 100% of my trades within 24 hours of execution by June the 30th, 2025. So you're saying to yourself, hey, I want to review my trades. I understand that it's important. So the specificity, conduct a review, and you should understand what that is. Maybe you've got a post-trade checklist that you say, I do this, this, and this, so there's no ambiguity. Because if you find a little chink in the armor, a little get out of jail, you'll take it. A little easy route. It's got to be measurable. You can measure it. Achievable. You can set aside 10, 15 minutes at the end of the day to do it. Relevant. Of course, you know that reviewing trades is going to help you identify strengths, weaknesses, etc. You've got that structure of like, I need to do it 100% of the time by June the 30th, 2025. And you're going to evaluate yourself at monthly points to say how close am I to getting this? And if you're not there by, let's say, April, you adjust it accordingly and say, well, actually, you know what? I'm just going to spend 5 minutes. I'm just going to do this. And you start small and you try to improve and you try to do a little bit, a little bit, a little bit. This is the important thing with trading is that just like anything else, you've got that goal that you know is part of the stepping stone to getting where you want to be. It's not a crazy goal. It's a goal that's achievable, but you also have those reassessment points where you go, well, I need to move and adjust. I'm not expecting to have 100% consistency in this straight away. And that's the mistake many traders make, by the way, is they say, you know what? I'm going to review every trade. I'm not going to do it. I'm starting from Monday and that's it. And they do it Monday, do it Tuesday, they forget Wednesday, they go, oh God, I can't be disciplined. It's like, give yourself chance. Like, give yourself some time to develop the new habit because you haven't done it so far. You're not going to demand it from you suddenly, and because you're angrier and you're looking yourself in the mirror, you're going to suddenly do it. You say, hey, I'm giving myself some time, but I'm going to check every month how my performance is doing. Oh, and that brings, this is why this is so powerful, by the way. You can make your own, or you can download it for free from tradersmastermind.com. The discipline tracker I had built for exactly this reason, where you go back and you say, hey, I want to do this by June the 30th, right? But you know you're not going to do it 100% every month. So you go January, okay, how many times did I let's find this one in here that's here you go, journal trades and emotion. Okay, your goal might be 15 times. So you click 1, 2, 3, 4. You miss some, that's okay. You go, how many did I hit? I hit 11. Right. So next month, I want to have a target of 15. The next month, I want to have a target for 18. The next month, I want to have a target for the 100%. So you build yourself up over time. Now, do you need this? No, you can use a piece of paper. It's absolutely free. You can go and download it. I give it to you as a gift. Tradersmastermind.com is there. Put your email in, you can have it. It's a Google Sheet. Just download it, edit it yourself. You don't need this, but this is the point. If you're trying to achieve something in trading, you don't expect to have it instantly. You say to yourself, hey, I want to do this and I want to do this. So being able to evaluate at regular intervals helps you just improve and improve and improve and improve. Okay, so let's look at short, medium, long-term goals that you could consider setting for your trading. So, and why I think it's important in showing some examples is it's so easy to get caught up in I want to make this, I want to do this. And that's a dangerous game to be in. Now, sure, if you're a little bit more experienced, and I'll show you some kind of experienced trader goals that you may have if you're kind of at that level, that's different. But if you're developing, you've got to kind of think clearly. So short-term goal might be improve your pre-trade analysis, right? Use a checklist to make sure you're analyzing all the setups and you want to get 90% adherence to that within a month. Easily done, and you can make that smart. Journaling discipline, stop loss execution, anything that's important. It's a short-term goal you can do within 1 to 3 months, right? You can kind of up your game. You can stop moving that stop. And you can have a 3-month window to allow yourself to do that. A medium-term goal might be something that's up to a year. I want to kind of focus exclusively on momentum ignition trades or trend trades. I want to do at least 50 trades in a row, review the results. You get the idea. I want to optimize on risk reward ratio. I want to engage in a trading community. It's not a shill here for Traders Mastermind. It's just to say, hey, maybe you've got a trading buddy. Maybe you have, a guy you email, another trader you email. you can say this is part of my goal because I want to share what I'm doing. I want to share my setups. I want to share my trade reviews with a trading buddy. I want to share my trade reviews on social media. You find where you do it, but maybe that will help you out. And having these goals kind of helps you move forward. Long-term goals, maybe you want to create a bigger playbook that covers all your strategies, and it's going to take you kind of a long time to do this. Maybe you want to step back a little bit and not go so screen based, and want to kind of be more swing trader, position trader with a kind of bigger position size. Maybe you kind of want to build up a better lifestyle, peak performance habits. Maybe you want to add meditation into it. Whatever it might be, you get the idea. Okay, so let's look at experience level now. So from beginners, intermediate, advanced, what's a good goal to set? Because we want to be realistic with what we're doing. We want to be smart with what we're doing, and we don't want to set goals that it's all very well setting these massive goals, but if you look yourself in the eye, you go, there's no chance I'm getting that in the short term. That's fine to have it there, but I need to create the steps to get to it. So beginners examples might be, listen, learn the market basics, create a simple trading plan and journal every trade. I always say to brand new traders, you just got to get in the thick of the game. You got to get in the thick of the game. You got to observe. You got to come up with some kind of approach and just note down what you see, and don't worry about anything else. Just make sure you're managing your risk, watch and learn. Maybe master one or two setups, follow your plan, and try not to take impulsive trades. And maybe you want to get a small green on the year. Maybe a bit optimistic. It depends on how long you've been trading. Intermediate traders, some goals might be, I want to explore some new markets. I want to track some more advanced metrics like MAE, MFE. Maybe that's something you want to consider. I want to try to get some consistency, a quarter of consistency, a half a year of consistency. To do that, I'm going to reduce my over trading. How do I define over trading? You get the idea here. I've got one big domino that I need to knock down. That's going to happen this year. And that because you're an intermediate trader. You understand what the roadblock is, or what the thing holding, or the anchor is holding you back. You look at it, you go, I know exactly what you are. I'm going to sort that this year. And you come up with a plan, going back to that smarter goal, and say, right, I might need to chunk that up into smaller goals to get to that bigger goal. But to knock down that biggest domino, to conquer that biggest challenge, I need to do this. And to do that, I could do with that, and that. Okay. And the smaller goals are this, this, and this. And that's up to you to decide, because you are the trader. It's your trading that's on the line. Take it bit by bit and use tools that you need, use ideas that you need, use whatever you need to do to say, right, that goal's done. I'm going to work on this and this now. That goal's done. And that makes it so much easier to get the bigger goal, the biggest challenge, sticking to your risk rules, adhering to discipline, finding an effective strategy, getting the confidence, those big dominoes you must knock down. It's easier to get to those if you can say, well, I'm just going to do my pre-market prep. I'm going to make sure I do it 80% of the time. Okay, right now I'm going to make sure I do it. Okay, just a little bit starts to elevate your thinking, your professionalism, your approach, your standards as a trader start to elevate. And then that all kind of comes, momentum builds, the flywheel builds, and eventually you're there ready, facing that final boss and saying, you know what? I've not overtraded once the past month. I'll do 2, I'll do 3, I'll do 4. Wow, look at my P&L. And you start to build that and build that and build that. And that then creates momentum and confidence, which then adds fuel to the fire. And you just then go into a new realm of trading. Now, I'm not going to say and promise you that it's going to suddenly happen overnight, but that's kind of what you want to approach. If you're a real advanced trader, maybe you want to kind of really optimize your execution now, to prune down some of the stuff that's just not serving you, go deep on some of your edge, because, when you're doing okay, some of the slight adjustments make a decent amount to your bottom line. You want to keep your drawdowns low. Maybe you want to find a place where you can really push the size in. Maybe, that's a weak spot for you of not adding enough size. You want to kind of add more capital to the game. Again, risk tolerance, all the other risk rules with that. But if you're an advanced trader, maybe that's something you want to look at. Maybe you want to create and document your expertise. Maybe you want to write a book. Maybe you want to jot stuff down. Maybe you want to be Marcus Aurelius with meditations and writing down, things that are important. Maybe you want to help some others. Maybe you want to share your knowledge. These are sort of things you can do when you're an advanced trader. So tools and tactics to consider as we wind this up, guys, is post and pre-market checklists, performance reports, daily report cards. These are stuff that are musts. You must have these things to help you get your goals. Without these, you're just flying blind. Yeah, you want the process of I do this every day. I do this at the end of the day. This is my performance report done, folded, next. You want to get your mindset dialed in, sort out your visual. We've done a whole topic on visualization affirmations. There's free content from Louise Non-Wheeler. If you go to hypnosisfortraders.com, there's plenty of free stuff on there. Visualization, affirmations, Steve Ward as well. You look Google Steve Ward. There's stuff out there that you don't need to pay for that will help you with this, help you with the visualization process, help you with your affirmations. And there's obviously premium stuff as well if you want that. But that's the point, is that these tools and tactics are available. Accountability, get a trading buddy. Give yourself some challenges to do. Say over 30 days, I'm going to do this. Find a partner, your partner, your spouse, make them your trading buddy. These are things that you can do that just help you move forward, and have a think about how you want to deploy this type of stuff in the new year. So hopefully you go and you review and you take a look at your performance for 2024, and you go, right, this is where I'm good, this is where I'm not so good, this is where I could potentially to be excellent, this is where I really got to avoid. Okay, fine. Now, what I want to do next year, what's my first goal, January, February, March? What I want to be at summer, what I want to be this time next year, at the end of the year, 2025, what do I really want my trading to be? And work back from that and piecemeal down the goals into your long term, your medium term, your short term. Align them with your performance from 2024, because that's fact. That's what happened, good and bad. Gather the resources you need, get your checklist, get your books, get your journals, get all the stuff you need. Get your team together, i.e., is that a mentor you've got? Is that a trading buddy you've got? Is that a community you're in? Is that your friend, your wife, your husband? You get your team together. Is it how do you need that there, that support, and then make your plan and just do something, just something. If you're like, many people watch this and go, okay, I really, really like it, good idea, yeah. Webinar ends, yeah. Never gets done. And that will mean that you'll be in the same place next year as you are this year. So do something. Just say, right, I'm allocating some time to this. I'm going to reflect on what happened last year. I'm going to set some goals. And even if you kind of don't get them, or you just that starting point of, I'm giving this the attention it deserves, because I just like from this book from Alexander Elder, come into my trading room, it is tough. You have to drive yourself, and you can't be beating yourself up all the time and like, I'm not working, it's not working, it's not working. You've got to be strategic. It's the element of being strategic and also driven. So you putting things together of like, hey, I want to be here by the end of this month. I want to be here by the end of this quarter. And come up with goals that you can actually achieve rather than your equity curve. It's very easy to fall into the trap of I've got to make money. I want to worry about your performance, your drawdown, what you're good at, what you're not so good at, where your blind spots are, where you need to apply pressure, where the resources need to go, where you need to back off. Understanding that as a trader means that 2025 can be a far more professional approach. We're retail traders and appreciate that, from the professional definition, if you like, but you know what I mean. You're approaching it in a much more clinical manner and a more considered manner than the majority of other traders. And that's how you get so that you're end of the year next year and you visualize this and you say, hey, where am I at the end of next year? I'm sitting there, I'm looking at my equity curve, and I'm like, man, that's the equity curve I wanted. I did it. That's the equity curve I wanted. And that's the start. I'm rolling now. And I did that because I set my goals. I did this, I did that. I gathered my resources, built my team, and I made my plan, and it paid off. And maybe it's, who knows what the journey is like, but you kind of have to have a little bit of a roadmap. You have to have some things you're achieving, aiming for. Otherwise, you're flying blind and you're just kind of cruising along, putting a lot of effort in, paddling away, and you end up exactly the same position as you were the year before. Okay. I've got some time for some questions, ladies and gents. I hope you find that of some value. Let me have a look. I'm going to look at my other screen here. So, Q&A. There it is. Zach says, I have many aims and goals, but they all seem to lead back to one goal to achieve the rest. That comes down to my discipline in following my strategy perfectly and rules. Zach, you are not alone, pal. It is probably the biggest nemesis for many traders because we are hardwired to be pretty bad traders, to be honest. So it takes some time. So use something like the discipline tracker, or help make your own thing up, and the process of, okay, my ultimate goal is to become disciplined and follow my strategy perfectly. Right? That's not going to just happen overnight. Can't just say I'm going to do it tomorrow. And maybe that's what you've been doing, and you've been struggling, and you get frustrated. Why can't I just stick to my rules? It's so easy. Just take it in bit by bit. Review, see where you are now, and try and become a little bit better next month, and a little bit better next month, and a little bit better with that process of saying, I'm going to stick to my plan 100% of the time by June. So you've got time. So when you do slip up, you go, okay, it's fine. Slip up. I know it's not going to be perfect, but I'm trying to improve. How many times am I allowed to take a trade that's outside of my rules? Or maybe you're allowed 10 the first month. They're like, you know what? I'm going to do 8 the next, and I'll do 5, and I'll do 3, and I'll do 0. And there you go, you cracked it. And it's that approach that will get you where you want to be, rather than being angry at yourself and frustrated. Why can't I stick to the rules? These are so simple. I'm an idiot. All this sort of language that we use, it's far better to kind of do it in piece by piece, audit where you are now, a little bit better, a little bit better. Hey, I hope all is well. I have a good strategy, but my competence of applying it is not in the subconscious part. I really have to think for each trade. If it's correct, it's tiring. How do I reach the stage of natural mastery of strategy? Zach, you know what? If you're struggling to think about in the heat of the moment, if you're struggling to make a decision in the heat of the moment, take a lot of that decision making away from you. So what I mean by that is be systematic in your approach as much as possible, so you don't have to think in the heat of the moment, because the heat of the moment is a lot of pressure, especially for a day trader. You're trying to look at this, look at that. Should I take trade? Should I not? Maybe you go, okay, well, these are the rules. I buy when I break above high, blah, 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 whatever it might be, right? And you kind of stick to that for the time being, and then you audit your performance. You say, well, actually, if I have a little bit of flexibility about when I pull the trigger, do I buy on the close? Do I buy as it breaks the level? I can adjust that. You start to layer in a little bit of discretion, but you need to earn the right to trade with discretion. It is something for you, and this maybe stings a little bit, Zach, but I've got your best interests at heart here. You've just said you're struggling with discipline, so we know that. You've also said that you've got a good strategy, but you don't apply it because you try and make decisions and have to think that each trade is correct. The solution for you is you need to earn the right to make decisions in intraday. You have to have a system that you follow to the letter. And again, this might take some time to prove that you can stick to something. If this, then that. If this, then that. Do that for a while. Forget about the performance. Forget about your equity curve. Then okay, I know I can stick to something. And maybe the results suck. Maybe they're awful. That doesn't matter. You need to prove to yourself that you can stick to just some simple basic rules. And then you layer in more complexity. You layer in more decision making. You layer in more so that it becomes a little bit easier to make a decision. I've proven myself here. Now I'm going to up the ante a little bit. I've proven myself here, up the ante a little bit. And that's the best way to do it, is to stop trying to put sticking plasters on the problems and fixing them and going, I need to do step 1 first. I'm working on step 10, and step 1 is absolutely shot to pieces. Let me go back. Let me do this. Let me stick to a week where I'm just buying the clothes. I'm buying this. I'm doing this. Very, very systematic. Start to make some deposits in your confidence bank. If you do that, then you can do something else, and you can do something else, and you can do something else. And then you can get to the point where you can make some more decisions and you feel more comfortable sticking to the rules. Another question here, Mark, a bit of a weird one. How do I get past my deep need to succeed and desire to be successful? This seems to get in the way of my discipline and mental stability sometimes, as I make decisions based off that and have a massive regret and shame on myself for once again letting myself down and deviating. I'm getting better at process driven, but that little voice always comes back trying to distract me. Thanks, Zach. Common problem, mate. We are all driven, and most of us use the stick more than the carrot. Compression versus compassion. Most of us push ourselves too hard. We beat ourselves up. When the negative self-talk is brutal. You've got to give yourself a little bit of flexibility and say, and just like I said about the time, and say, I want this, but I can't get it tomorrow. I can't get it next week. I'm not going to wave a magic wand and all my trading problems be fixed. It takes time. So let me aim for month X to sort this out. And sorting this out means sticking to my rules. Okay, so and you get the point. So I don't want to repeat myself, but it's doing that as opposed to constantly going, I'm going to do it. And then you don't do it. And you get beat yourself up. I'm going to do this time. I don't do it. You beat yourself. I'm definitely going to do it this time. And you beat yourself up. No, that's just never going to serve you. Take your time and accept the fact that it's not going to be an instant fix. You just improve a little bit and improve a little bit and improve a little bit. And that honestly doesn't take long before you look back and go, "Oh, that was the most productive 6 months of my trading. I'm a different trader. I feel so comfortable and confident in how I'm trading now. I can stick to my rules." And that's where you want to be. Otherwise, you beat yourself up, beat yourself up, beat yourself up, and it's a vicious cycle. Why can't I stick to my rules? It's so simple. Yeah, really idiot. Rah, rah, rah. And it just doesn't serve you. Very, very difficult place to be. So, have a bit more compassion with the way you approach things. Um, Peter Daniel quite rightly says, there is a holy grail in trading. Listen, there is a holy grail in trading. Everyone listens. It's not some mythical strategy that wins every trade. Sorry. It's sticking to your strategy and trading plan. If you can do that, you found the holy grail, so to speak. And so it says something to think about before the new year starts. And he's right. And tongue in cheek, of course, but that is the biggest leap forward you can make, is being able to stick to your strategy and plan. If you can do that, you can make adjustments, you can improve it. You're in a very, very powerful position. You're ahead of the curve, way ahead of the curve. Panos says, what happens after becoming profitable? After becoming profitable, Panos, you try to be more profitable. So you look at your numbers and you say, okay, how can I increase that number next year or next quarter? And you say, right, well, I need to reduce this. I need to put more size into this. I need to make sure I'm on point for these conditions. And it becomes a game of, okay, well, how can I do more of what's working, less of what's not? It's the same game, really. You just apply pressure in different areas. I'll butcher your name, pal. Avars? Avars, of course it is. I thought it was an L. Apologies. What would be a good solution to avoid the down days in the market? As I did the overlaying with the curve, I do better whenever market is bullish, but easy. Yeah, easy in hindsight. Well, if it's that granular, it is, yeah, hindsight difficult. But maybe your job is, okay, how do I identify a down day as quick as possible? So what are the clues that today might be a down day? I don't know what instrument you're trading, but maybe the overnight range is important. Maybe the opening range is important. Maybe all these things take in, and then you go, actually, I think after an hour, this is probably going to be a down day. On balance, it's going to close red. And I know I'm not very good on those days, so I'm going to stay out. So your job doesn't become trying to be predictive or use your crystal ball. It becomes, how quickly can I observe this day is not for me and step back? It's harder, of course, because you're doing intraday to intraday. Appreciate that. But that's something that you can look at. Another Zach. Hello, Zach. Not related to today's webinar. Will you be attending the London Trader Show next year? I'm not sure, Zach. I'm not sure when it is. May well be. Zach says thank you. The other Zach says thank you. Zach. The other Zach says, when I do follow the rules, the results are much better. Zach, it's the same for most. No, it's not. That's not true. It's the same for all traders. And if they're not, and if the results are not better, it's temporary. There's no trader out there that says, you know what, I do much better. Yeah, there's a small exception there. If you're not careful, you can shackle yourself to too many rules, which can impede performance. You've got to be a little bit careful with that. But on the whole, I think if you've got good, solid rules, 99% of the time, you're better off sticking to them. Gary says, great session. Always appreciate your feedback, as always, Gary. It's thanks for your help this year. Yeah, you've been on everyone, Gary, I think, haven't you? So yeah, appreciate you you paying attention to what I have to say, and I'm glad you found value from it. It's good. Judge says, thanks, Mark. So useful as always. Appreciate that, pal. I'm wondering about the MFE and MAE. Is there somewhere that you can find that data in an easy to access location for all your trades? Or is it only possible to get it by plotting your trades on the chart and measuring it? Yeah, sadly, Judge, it's not an easy thing to do. Some trading journals have it as part of their package. It depends what you're trading as well, the instrument. Jim, what you can do is this. If you want to have a shortcut with this, is you just find your top 10% of your bottom 10% of trades, and you try to identify themes with those. If you have to do this all manually because you kind of have to extrapolate, download the data on and do a lot of eyeballing, that saves you a bit of time. Top 10%, bottom 10%, and see what the MAE, MFE is on those. And that is a little bit better. It's kind of not as burdensome as doing every damn trade, but it kind of gives you a reasonable benchmark. But yeah, it's not an easy thing to do. You should start doing it. Maybe something to consider. Start doing it from 2025. Start logging that data so that you have got it and you can make some adjustments and course corrections based on some of the numbers you're getting. Zach says, you're a good person, Mark. I appreciate that, Zach. Facts coming from you, a seasoned professional. Yeah, I appreciate your feedback, pal. You watched my video on Arvol and it's helped me with a daily expectation of targets. Good. I'm glad. That's an operational thing that hopefully is helping you out. Judge says, thank you. A couple more questions over here very quickly. 5 minutes past, but let's see. What am I looking to work on in 2025 at my level of trading? Toby, I am trying to do more of what works. I'm trying to get more size on the plays that are working well and be smarter at catching ideas and themes quicker. So, China kind of came in. We had that China bid coming. That was a real kind of out of nowhere type of thing. And I think being on point and ready for that with size earlier would have served me better, even though it was good for me. I've over the years I've kind of stepped back a little bit in terms of frequency of trades. I want to do less is more. I kind of keep doing that. That was tricky initially for me because I was very active. Stepping back, calming things down, slowing things down. I just want to do more of that, taking more the right trades, less of the trades that. It's a fine line, right? Because you still got to play the game. You still got to be in there to see if the trades start to mature into the trade you want. But at the same time, I don't want to be sitting watching the screen. I don't want to be sitting on the desk when I'm pretty certain there's not going to be a great opportunity. So I want to be very intentional about my focus, about my resources, capital, and attention as well. And I think by doing that, that will kind of improve things even more for me. Avar says, thank you. Royston says, another great session. Thank you very much. Right, ladies and gents, we shall call it an evening there. Thank you for your feedback. Thank you for your questions. Happy Merry Christmas to you. Happy New Year, and hopefully we're back in the new year. Do that stuff. It's worth it. I promise you. Do it. All right, guys. See you later. Bye-bye.